Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. I'm Juliette Sarli. Great to have your company. Let's see where we are finishing out the trading day. And we are down 0.8%. You can see there the sell-off that started around 11:30 when we got, well, exactly at 11:30, I guess, when we got that jobs data. Unemployment surprisingly ticking lower to 4.3%. So rate cut bets being paired quite substantially. And that saw investors press the sell button, particularly a lot of these interest rate sensitive stocks, the A-REIT sector down 3.3%. IT still coming under pressure as well amid concerns about lofty valuations, particularly when you saw the Nasdaq, the only index in the red on Wall Street overnight. But of course, we do have these hopes that the US government shutdown is coming to an end with President Trump signing that order that has been passed through the House. But it does seem that that's kind of priced in and not too much momentum in terms of upside for investors. But of course, when it comes to the overall thematics of the day, it really is about these rate cut bets being pared back. So rate relief roadblock. In fact, when you look at money markets, they've further reduced the probability from that reduction of interest rates that was sitting at around, 80% last week for a rate cut by June to now around 30%. And AMP is suggesting that there could still be one rate cut, but they're pushing it out more likely to around May. That's similar to what we saw from, or heard rather, from Stephen Halmarick earlier today. Oliver Humes, Matt Bell also kind of in that camp. So very much does look like the economy is, as Stephen Halmarick put it, in a pretty Goldilocks condition, which is, of course, great news, but it does mean for mortgage holders that there will be a little bit less relief potentially. That is, as we see unemployment back at 4.3%, the number of employed people rising substantially in October, well above the 20,000 expected by economists, and the participation rate, so the percentage of working Australians who are in the labour force, holding steady at 67%. And turn the lights back on. President Trump, as we mentioned, signing this legislation ending the longest government shutdown in history after the Republican-controlled US House of Reps passed a bill that will allow the restart of disrupted food assistance, pay hundreds of thousands of federal workers, and get the air traffic control system back on track just in time for Thanksgiving. The legislation extending funding through to the January 30th, leaving the federal government on a path to add around $1.8 trillion a year to its $38 trillion in debt. All right, let's have a look at some of these sectors, particularly the REITs, as I mentioned, very much hit by the fact that potentially we will not be seeing further interest rate cuts anytime soon. If we've got to look at the tech players, yeah, there's some of the tech players. Xero, of course. Today, look, it seems that investors are unnerved about its outlook or its strategy because the first half result was actually quite solid. Shares down by around 9% today. Energy stocks also under pressure. Santos and Woodside down by around 3%, but there was a little bit of a pickup in some of the materials players. Fortescue notably having a good day, up 2.3%. South 32, BHP and Rio also in the black. DroneShield shares, one of the biggest laggards. This is amid news that a raft of executives, including CEO Oleg Vornik, sold their shares last night as some of them had vested. Oleg Vornik, in fact, selling nearly $50 million worth. Xero there, we mentioned it seems to be about the outlook because profit did rise 42% for the first half of the financial year. Orica reporting its strongest earning in 13 years, shares up by around 2%. GrainCorp shares there down 11%. Net profit fell 35% to $40 million for the financial year. And Webjet there, of course, also in focus, or Web Travel Group there. Webjet saying underlying earnings for the first half of the year falling 9% to $14.4 million. Let's make sense of it all with Mathan Somasundaram, Deep Data Analytics, who joins me now. Mathan, it does seem that we are selling off on the likelihood that the RBA could be done, but why do you think no pickup on the fact that the US is about to turn the lights back on?
Yeah, I think it's interesting, double sides of the coin, I suppose. US, I don't think anybody really is going to see a huge difference whether the government is open or closed. The same erratic policy nature will continue. I don't think it's going to be a huge difference. I guess it's positive for the local economy in the context that Snap and federal workers getting paid, and that should keep the economy ticking along. It probably didn't help when the White House come out and says they're not going to potentially release the October inflation and payroll numbers. And everyone went, okay, so it must have been pretty bad. So that's probably taken a bit of the steam out. There is a slight hope that weaker numbers will drive a potential rate cut from Fed. I mean, this is the problem both in Australia and the US. You've got economy weakening, but not really that much. But you've got inflation rising, and everyone's sitting on asset bubbles. So the central banks are kind of caught between a rock and a hard place. By default, all central banks want to stimulate the economy, but the only thing that kills the golden goose is the inflation cycle, and that's going up. So they're kind of stuck, and they're probably going to wait to see something gives them that green light to cut. But as we've seen with inflation data and now with employment data, RBA is behind the 8 ball as far as rate cuts are concerned.
When you said they're not going to release, I thought you were about to go down another path there. I won't get into what I thought you were going to say. That's not market related. All right, let's get stock specific then locally. Xero, am I right in thinking investors just don't like the outlook? I mean, it was an okay result and shares down substantially.
Yeah, I think you have to remember that following the US mega tech run, local darling techs have had a crowded trade. There's a lot of people parked in there. Expectations are pretty high. And if expectations are just met, you're going to see some profit taking. And you've got the other side of the coin is the fact that these are high multiple stocks. So any kind of rate cut, expectations being curbed is negative for the growth sector. And that's going to hit them. So there is a certain level of bond yields that are looking like it's breaking out to the high end. It's 4.4, 4.5. So in that context, growth stocks are going to be under pressure. But then again, in this market, so far, there's a lot of things that are happening that are non-correlated. So we'll have to wait and see how that plays out. But we've seen that with most growth stocks at the moment. If you just meet expectations, despite how good that expectation is, you're getting a pullback in that. So I think Xero is part of that. I think Xero it's a very high quality business, but everyone knows it and it's priced for that. It is a high quality business. It's executed better than most people expected in the US, and the growth story still plays out. Just the problem is, how much are you willing to pay for it?
Yeah, absolutely. How much are you willing to pay is always the name of the game. What else took your eye today? I mean, I touched on the interest rate sensitive stocks. There was a little bit of other corporate news out there as well. What did you like? Domino's was an interesting one too on those broker calls.
Yeah, Domino's is a fascinating one because there's that M&A, media beat up came through and the stock bounced. And then there's been a fair bit of movement in the Domino share price, which has gone up. The fundamentals haven't really changed. It's kind of annoying because I was thinking it was going to get a bit cheaper so I can buy into it. So I've been keeping an eye on it. But in context, it's had a really good bounce. I'm not chasing it here with these kind of outlook statements. So I'll wait and see how this plays out. So because there's a fair bit of M&A already priced into the share price. So my worry is if that doesn't play out, you'll probably see a pullback. So it's fascinating where that's playing. And then you got the food sector playing out, and some of the food stocks report out of sync with everyone else. So we had that GrainCorp update, which was pretty negative. We kind of know that in South Australia and Victoria, there's a drought conditions, and that's going to hurt some agriculture to a certain extent. But then the theory is that over time, eventually we'll get the rain and that'll break and the demand will come back in. So we'll have to wait and see. GrainCorp is a pretty good player. Agriculture sector is tough at the best time. So you always want to look at it when things get a bit hairy and market starts to throw them out. Today was an interesting move in GrainCorp. I'm actually interested in GrainCorp now. I'm going to have a look at it.
That's good. That's good when you look at that and go, okay, maybe it's on sale and maybe it's worth some value at the moment. I know what you think about CBA, but just remind those that don't, especially considering it sold off this week.
Yeah, I'm not surprised. I don't think most people are. You talk to any retail client, they've had it for a long time. They don't really care. But the reality is it's extremely expensive. It's a bank you're buying for yield. You're not buying for growth. There is no growth. I don't know why people bother talking about growth when it comes to bank sector. It's a yield play. So it pays less yield than the US government. So you can buy a 10-year bond yield and get a higher yield. So what are you buying it for? So I expect it to keep coming down. It's really moving on the fact that it's the biggest stock in the market and the ETF flows pushed it up. When it got to like the 190 level, it was insane. It was probably one of the most expensive banks in the world. We're good, but we're not that good. We're not better than the US government. So the banking sector will come off. Pretty much all banks are trading near all-time high. And that's just not logically at all adding up. And if you think about the Reserve Bank is not going to be cutting rates anytime soon, that means their only business model is mortgage. So in theory, demand's going to weaken. So I don't know why you're there. I know why they're there, because you don't want to sell because of tax. But as far as an investment cycle for the current prices, yeah, I can't see any bank. CBA gets a premium. I don't think it deserves that much of a premium. I suspect you're going to see more downside in all the banks. CBA will lead that too. So downside risk coming.
All right, Mathan, always appreciate it. Thanks so much for your time today. Mathan Somasundaram from Deep Data Analytics. Well, Xero, of course, was the stock of the day. Andrew spoke to Howard Coleman from Team Invest, Kai Chen from MPC Markets.
I used to joke that it was appropriately named Xero because it made zero profits. But the last 2 years, it's actually been making profits. It took about 15 years to get there, but it's actually making profits. Problem though is it's on a PE, or at least it was before today, of about 103. And no company has ever maintained a PE of over 100 long term. It's never happened. So when PEs get up into those stratospheric numbers, you know they're not going to stay there. So it is now making profits. It does therefore look better than it looked before, but it's only had 2 years worth of profits. So from a Team Invest perspective, we don't have enough data to make any kind of confident predictions about it.
You know, it's a massive company. Everyone uses it. You know, it's probably the most used accounting software. So I think its addressable market is massive. For us, where its value, we're looking at about $120. If it gets down there, or even now, you know, at $130, you know, it's interesting for us. So it's definitely something we're looking at.
All right, let's have a look at some of the market leaders on a down day. We did search high and low for these, but of course Domino's looking good on that broker call, or those broker upgrades, I should say, quite a few there, up 12%. Flight Centre, of course, as well, coming back after yesterday's update, up 7.5%. But the lithium stocks had a good day. IGO, Liontown, PLS, all firmer. Let's have a look at the laggards. We touched on DroneShield, all the execs dumping out there. Mathan quite likes the look of GrainCorp at these levels, down by 11% after its numbers. Xero, of course, hit as well, following its update. Infotrail and Superloop as well. In the small end of town, again, a lot of these lithium players looking good. Core Lithium was up by 23% to the downside in the small end of town. Webjet, of course, on that update, down by 16.3%. And Waratah Minerals also had a bad session, down 11%. Well, tonight, hopefully, we get the government reopening and CPI data for October. But as Mathan alluded to, the White House has indicated they're not going to give the jobs data numbers that we missed. So potentially investors smell a rat there. China retail sales for October due tomorrow. They could lift by a little substantial amount. Retail investment rather could contract by 0.8% from a year ago. And a number of AGMs, including Lendlease, Vault Minerals, Virgin, Navigator Global, of course, we spoke to them today. You can find that interview on our website. I believe the team has already uploaded that one, so that will be there now. And the local market finishing lower by 0.8% today. When it comes to the ASX 200, it had a better session than the CBO 200, still though down by 46 points, 0.5%, 8,753, and that is a new 50-day low. We'll be back from 9:45 a.m. Eastern tomorrow. We'll see you then.